Chocolate. It's one of the simplest pleasures in the world. A sweet bite after a long day, a comfort shared between friends, a ritual passed down for generations. But in 2025, that simple bar of chocolate carries a secret. Prices are soaring, bars are shrinking, and yet, the people who grow the cocoa that make it all possible are still living in poverty. So who's cashing in, and why has the chocolate industry, one of the world's most beloved, been built on promises it never kept? This is the hidden story of chocolate, the sweetness you taste and the bitterness they hide. To understand why your chocolate bar just got more expensive, we need to travel back, not decades, but centuries. Cocoa first arrived in Europe in the 16th century, carried from the Americas. At first, it was a luxury for the elite, spiced drinks sipped by royals, a taste of the exotic. But as demand grew, so did the machinery of empire. Colonial powers established vast plantations in Africa, fueled not by innovation, but by slavery. The model was simple and brutal. Land was taken, people were forced to work it, and the wealth flowed back to Europe. Chocolate's sweet taste masked an economy of suffering. Fast forward to today, and the legacy is still visible. More than 60% of the world's cocoa comes from just two countries, Ivory Coast and Ghana. Millions of smallholder farmers grow it, yet most survive on less than $1 a day. Chocolate may feel universal now, lining the shelves of every supermarket, but the system that delivers it to you is still built on imbalance. A sweet ritual for us, a bitter struggle for them. For decades, chocolate felt untouchable, a treat that stayed cheap even when everything else crept up. But in 2024, something snapped. Cocoa prices surged to their highest levels in almost half a century. Supply shortages, unpredictable weather, and disease in the crop sent markets spiraling. For the first time, chocolate makers faced a crisis they couldn't ignore. And so, they didn't raise prices outright, they did something subtler: shrinkflation. The bars on your supermarket shelf stayed the same brand, the same wrapper, but quietly, the grams melted away. You paid the same for less. Some brands even tried to spin it as innovation, new, sleek design. Translation? You're paying more money for fewer bites. And the numbers were staggering. Cocoa futures more than doubled within a year, hitting over $12,000 per metric ton in 2024, the steepest surge in living memory. To put that in perspective, cocoa was briefly trading higher than copper. Imagine explaining to your grandparents that chocolate bars were outpacing industrial metals. The headlines told us that cocoa farmers would finally get relief, that higher prices would mean better incomes for those at the source. But here's the bitter twist: they didn't. Because even in a boom year, most cocoa farmers remained trapped in poverty. So who actually profited from the price surge? That trail leads us higher up the chain. So if farmers aren't cashing in, who is? The answer lies in a supply chain designed to keep profits flowing upwards. At the bottom, millions of smallholder farmers, most earning less than $1.20 a day, far below the poverty line. In the middle, traders and exporters who set the terms. And at the top, a handful of global giants, Nestlé, Mars, Mondelez, companies that control more than 60% of the world's chocolate market. When cocoa prices hit record highs in 2024, you might imagine that money finally trickled down. But the reality was very different. Companies passed the costs to consumers through shrinkflation and higher retail prices, while shielding their own margins. Take Nestlé. In 2024, the company reported profits in the billions, even as it raised prices on chocolate brands across Europe and North America. The cocoa farmers, meanwhile, saw little change in their income. The price boom that looked like salvation was just another illusion. And here's the staggering imbalance. While the chocolate industry as a whole generates more than $140 billion annually, the average cocoa farmer earns less than 6% of the final retail price of a chocolate bar. Out of every dollar you spend, just a few cents reach the hands that grew the beans. Because this industry isn't designed to reward the growers, it's designed to protect the brands. And for 2 decades, those brands have promised change. They've promised to clean up cocoa once and for all. But the next chapter shows just how hollow those promises were. 2 2 decades ago, Big Chocolate made a pledge. After documentaries and lawsuits exposed the use of children in cocoa fields, Nestlé, Mars, and other giants promised the world they would end child labor in their supply chains. They set deadlines, they announced million-dollar programs, they reassured us that soon, chocolate would finally be clean. That was more than 20 years ago. Today, the reality is staggering. Studies estimate that more than 1.56 million children still work in West African cocoa production. Some are carrying machetes bigger than they are. Some are exposed to toxic pesticides. Others are kept from school, condemned to repeat the cycle of poverty their parents never escaped. And in some regions, the situation is even worse. Surveys show that more than 40% of children in cocoa-growing households are engaged in hazardous cocoa work. And the companies? Each time the deadlines passed, they shifted the goalposts. We need more time. The problem is complex. We're making progress. But progress never came. The truth is that the industry was built on cheap labor, and child labor was always the easiest corner to cut. This isn't ancient history. It's happening right now. The chocolate bar you buy today could still carry the fingerprints of a child forced to work the fields. And yet, in 2025, the industry is facing something it can't delay. A new law, one that might finally force their hand. In 2025, Europe introduced a new rule that could reshape the entire chocolate industry, the EU Deforestation Regulation, or EUDR. For the first time, companies selling cocoa into Europe, the world's biggest chocolate market, must prove exactly where their beans come from, not with vague promises, not with glossy reports, but with hard evidence. GPS coordinates for every farm. On paper, it sounds revolutionary. If you can trace cocoa all the way back to the tree, you can cut out child labor, illegal plantations, and deforestation. The chocolate in your hand would finally have a clean origin story. But the reality is more complicated. Millions of smallholder farmers in Ivory Coast and Ghana don't have the technology to provide GPS data. Some don't even own smartphones. Without expensive new systems, many risk being excluded from the European market altogether. And if they can't sell, they can't survive. And make no mistake, the corporations know what's coming. Industry lobbyists have already warned that compliance costs could run into the hundreds of millions of dollars, costs they plan to pass on to consumers. So while the law was designed to protect forests and people, it may create new victims. The poorest farmers pushed further to the margins. Meanwhile, the multinationals with their resources and compliance teams will adapt and keep their profits intact, meaning that once again, it's consumers who pay more, while the growers at the source remain trapped in poverty. So if laws can't fix it, what about the labels on our chocolate bars that claim to? If laws can't guarantee fairness, then maybe labels can. Fairtrade, Rainforest Alliance, logos stamped onto wrappers, promising that your bar was made ethically, that farmers were paid fairly, that forests were protected. But dig a little deeper, and the illusion begins to crack. For years, researchers have found that certification schemes often deliver little of what they promise. In some cases, farmers earn just a few cents more per day. In others, the audits are inconsistent. A plantation may pass inspection while children still work in the fields. And here's the darker truth. These labels don't exist to transform the industry. They exist to reassure the consumer, to make you feel better when you buy, to protect the brands by passing responsibility onto you. It's not that every certification is worthless. Some do raise awareness. Some do improve conditions at the margins. But none have solved the fundamental problem. An industry designed to squeeze value from the bottom and concentrate it at the top. So while you unwrap a bar that claims to be fair or sustainable, the reality may be far less sweet. And the question we need to ask is this: if even the solutions are illusions, what does the future of chocolate really look like? So where does chocolate go from here? In the short term, prices are unlikely to fall. Cocoa shortages, stricter laws, and rising demand all point in one direction: higher costs for the consumer. Bars will shrink, luxury branding will expand. Chocolate may slowly return to what it was centuries ago, a treat for the wealthy. But there's an even deeper threat on the horizon: climate change. Cocoa can only grow in a narrow band of the tropics, and even there, rising temperatures and shifting rainfall are pushing farms to the brink. Some scientists warn that by 2050, up to half of West Africa's cocoa land could become unsuitable without major adaptation. That means deforestation pressures will grow, conflicts over land could intensify, and the human cost for farmers already surviving on the edge will only worsen. Chocolate won't disappear, corporations will adapt, they'll market new, sustainable lines, push lab-grown alternatives, or move production to new frontiers. In fact, startups are already experimenting with lab-grown cocoa cells in bioreactors, real cocoa without farms at all. But the truth behind the sweetness, poverty, exploitation, illusion, will remain harder to swallow. Because this isn't just about candy, it's about the hidden systems that shape the products we love and the costs we never see. If you want more exposés of everyday industries, more stories of logos, labels, and lies, subscribe and stay with us. This isn't business as usual. This is the shadow market.